Amigo, ¿cómo está? Mucho bueno. All right, so this screen right here should be open and live on YouTube. Somebody want to check it out and make sure it's okay. How did you do with weekly trade today? All right, Antoke. Was it Andonic? Andonico? I don't know, Andonic. Andrew Nick, I'm not going to find out until tomorrow because options expire tomorrow. However, I did make over 1% this week. That is my goal. Safe, predictable, consistent 1% per week using nothing but pre-qualified dividend stocks. And those, my friends, are companies that have consistently increased their dividends for more than 20 consecutive years. So let's go through the disclaimers first of all. First of all, I'm not a lawyer. I'm not an accountant. I'm not a financial advisor. I'm not a broker. I'm not anything. I'm just a regular guy who got fed up with the BS and tried to figure out a way for his daughter to trade along with him. My daughter was 9 years old back in 08. She sat on my lap and said, Daddy, please teach me what you're doing. So, any trades today, Marco? Yes, we did. All right, go ahead and get oiled up. I'll pick you up in 5. All righty. So, in 08, when my daughter wanted to do what I was doing, I had to come up with a trading strategy that was safe, predictable, consistent, and no way she could lose. Wait a minute. Safe? Oh, simple. That one I forgot. Simple. Yep. No. You got to get the 5 criteria first. There's 5 criteria, 5 rules, and there's another 5. Okay? First of all, had to be simple. Has to be safe. Predictable, consistent, and no way to lose. Austin, how's it going? Okay, the 5 rules. 5 rules are very simple. 5 criteria, 5 rules. 5 rules are never buy something you're not okay with owning for a long period of time because you just might have to. When I say a long period of time, the longest I've ever held anything was 9 months. Longest I've ever held anything. I was talking with someone this morning, and she's like, yeah, I've been holding on for like 10 to 15 years. So, what are you kidding me? Holding on to something for 10 to 15 years. Okay, so never buy something you don't want to hold long term because you just might have to. Never sell at a loss. Make sure it has 20 years or more of increased dividends. Weekly options, and then make sure the numbers work. Okay? 1 second. What? It's 9 o'clock. I'm sorry, go away. I love you. Bye. You probably heard him in the background. Dada! Anyway, kids still call me Dada. That's perfectly fine by me. How did you do weekly? All right. It's Friday. Yes, it is. All right. So, Marco. It's Friday. However, options don't expire until Saturday. So it's not until Saturday night or Sunday afternoon. He sounds like you. Yeah, he does. Well, Florida girl, I haven't heard from you in a while. You still owe me a lunch. You do. All righty. Alvin Pro King Services. Anyway, as I was saying, rule number 5, okay, the 5 rules, make sure the numbers work. What do I mean by that? Let's go out for lunch anytime. Yeah, DM me with your number. I'll give you a buzz, and we'll see what we can work out. All right. First thing I want to check out, when I say the numbers, Becca Makawa. Nice. Becca, pleased to meet you. Anyway, first thing I always want to do is find out what can I buy it for. Okay, well, let me back up for a second. There's a few other steps before we look at the numbers. First thing I want to do is make sure it's a quality company. Okay, what do I mean by a quality company? Well, let me show you this list right here. First off, this is Warren Buffett's list. Okay, we all know who Warren Buffett is. Okay, more than likely. I love that I found this channel. It's different and cool. Well, I hope you're learning something. I hear dogs and kids in the live. It doesn't bother me no more. It doesn't bother me none. Well, you know what? Where's the lobster shirt? I got to change out shirts every once in a while. I get comments on my shirts, but to me, it's just a clean shirt, top of the pile. For me, I would wear the same shirt over and over and over again. It really doesn't bother me. The lobster shirts is on the list, and it's in the rotation. Kind of like my stocks, it's in the rotation, of course. Okay, so the way I look at it, if you ever seen any of my videos, I'm done. Hi, how you doing? If you ever seen any of my videos, I don't edit anything. Seriously, I don't. I love how you talk about the same thing every night. Shows passion for what you do. Well, Pakaris, thank you for that. Nice shirt. You think that? All right. So the reason why I don't edit anything, because I have other things better to do with my life, and life is messy. It's not simple. Okay. If the dog barks, well, yeah, dogs bark. If the kids come knocking on the door, yeah, they come knocking on the door. You know, my grandson, he just waltzes on in. Hey, Papa G, you know, and it's like, hey, pick him up and say hi to everyone. You know, because life happens. All right? So let's get back to what we're talking about. Now, when I say it comes in order, right? First thing is first, you need to pick good quality stocks. Like he owns the place. Well, of course, he's 4 years old. What does he know? I'm subbing. All right. I'm done. Cool. Mark, hi James. I made over 1% for the 8th week in a row. Your strategy is working. Mark, 8 week in a row, dude. I got you beat. I've been doing it for decades. But it is. I'm glad you're doing it, Mark. Seriously, I am. You know, that's basically what I'm here for. I'm tired of the little guy. I'm one of the little guys. Really, in a crowd, you wouldn't even notice me. Seriously. I like to keep my low profile. I don't like to stand out loud. You know anything about real estate? Yes, I do. I know a shit ton about real estate, but I don't talk about that here. 3 dividend stocks, please. Oh, that's simple. American Express, Bristol Myers Squibb, MasterCard, Verizon, Visa. All right. Anyway, that's 5. Okay. It's a whole bunch of them. Okay. So step number 1 with everyone, always, always, always step number 1, find a good company that you can stand behind. Something that you would buy and just hold on to. Okay. Put it into your Rolodex. Roll it every 90 days. Why? Take a look at it. This is Warren Buffett's list. Okay. Now, this is just 1 month. Now, remember, when you're looking at a list and you put it into your calendar, we're going to get to that in a minute. When you put it into your calendar, you will see American Express, Bristol Myers Squibb, MasterCard, Verizon. They pay a dividend every 90 days. Okay, so this is the month of July, which is the first, which is the third quarter. So the third quarter starts on the 1st. Okay, this is last year only because the dividends aren't up yet for July, October, July, August, September. Is that right? June, July, August, September. I forget things after a while. All right, so every 90. Let me read some of these to you, and then you let me know which ones you've never heard of. That's the way I like to look at it. Okay, Globe Life, huge insurance company, huge Globe Life. American Express, Bristol Myers Squibb, MasterCard, Verizon, AbbVie, Procter & Gamble, Bank Mellon, Ally Bank, Aon, ATVI. I have never heard of them. But it's on Warren Buffett's list, so it squeaks in there. Wells Fargo, Capital One Finance, DHI. I'm not 100% sure about DHI either. But if it's good enough for Warren Buffett, it's good enough for me. Now, this is just the month of July. Okay, after the month of July, we go to August. Give it a second. Oh, load up. There we go. You ready? Let's take a look at August. All right, we already did those. Siri. You know who Siri is. LPX, Louisiana Pacific Railroad. Okay. Visa, Apple, Jeffries, UPS, Kroger, HP. You would think it would be Hewlett Packard, but it's not. It's Heimlich and Payne. Okay, Heimlich and Payne. CVX, Chevron, Moody's, DE. Who the heck is DEO? Ooh, I got to check on that one. It's on Warren Buffett's list, so DEO. What is DEO? Diego. Okay, never heard of them. But hey, if it's good enough for Warren Buffett, I'll take a look at it. Didn't GL, Globe Life, just tank due to fraud? You know, Parkus, I honestly don't know. I really don't watch very much television because years ago, when I was growing up, we had people like Walter Cronkite and Howard Cosell. They would tell you the truth, not watered down version, not what somebody else wanted us to know. Do you eat the loss? Do I eat what loss, Parkus? I didn't trade Globe Life this year. I mean, this week or last week. I didn't trade Globe Life at all. All right, so let's finish taking a look at the stocks. Johnson & Johnson, Bank of America, General Motors, Kraft. Come on, Kraft has been in business for over 100 years. General Motors, over 100 years. Bank of America, over 100 years. Johnson & Johnson, over 100 years. Diego, I have no idea. Moody's, I'm pretty sure they're over 100 years old. Chevron, over 100 years old. Heineken Pain, don't know. Kroger, don't really know. Siri, not really that old. Apple, not that old. UPS, not that old. Visa's been around for a while. Wells Fargo, over 100 years old. Capital One Finance, over 100 years old. The rest of them, I'm not 100% sure, but that's Warren Buffett's list. If I show you 2 months, it's actually 3. The reason why is there 3? Because each one of these stocks pays a dividend every 90 days or every quarter. First quarter, January, February, March. Second quarter, April, May, June. Third quarter, July, August, September. Fourth quarter, October, November, December. Every single quarter, every 90 days, these companies pay a dividend. And then every year, they increase their dividends. So are you a day trader or a swing trader? On Crispy, I'm not really either. Okay, you could call me a dividend investor because I structure my trading around, see these little green dots? These represent the EX date. The EX date is the last day the stock trades. Well, let me just address that right now. There are 4 dates. He's not. He's dividends. Thanks, Marco. 4 dates you need to remember. How long do you hold a stock? Monroe, you're relatively new here. I'm going to address that in a minute. Just hold on, hold tight. 4 dates you need to remember. Have you ever sold calls that were out of the money if it was close to your price of the shares? Well, exactly. That's exactly what I do. Anytime. Thanks, Marco. Okay, 4 dates. You ready? 4 dates. Date number 1. Self-explanatory, the announcement date. That's when the company comes out and say, hey, this is how much money we made. This is how much dividends we're paying. Okay, announcement date. Date number 2, that's the most important one. The second date is the EX date. The EX date is the last day the stock trades before the dividends pays out. Can you share your top 3 stocks? Sure. Macy's, Nordstrom's, and Walgreens. Those are my top 3 this year. Okay? So, date number 3. Oh, wait a minute. Date number 2, the EX date. Each one of these dots on here represents the EX date, the last day the stock trades before the dividend is paid. Why are they on there? Well, because I want to know when are they paying their dividend. So look at Johnson & Johnson right here on the 25th. All right, so stocks have a tendency to go up before the dividend is paid. Well, I want to buy Johnson & Johnson 2 weeks before. See, here's the 25th. All right, 1 week, 2 weeks, on the 7th, on a Monday. Because I do weekly options. I buy on a Monday, I sell the option, and the option expires on a Friday. Hold on a second. Milo. All right. DJ, I gave you 3 stocks. So you don't care if the options are in the money or out of the money as long as you make you 1%. Milo, that's basically it. But let me explain to you as I progress, okay? Because you're relatively new here. Encourage more viewers to share. Yep, like, share, subscribe, all that kind of nice, neat, fun stuff. Jules, thank you. Byron, Petrobras, never heard of them. Okay, so let me finish my example, okay? So each one of these dates is the EX date. It tells you when the stock is going to have its dividend. Okay, so when they have their dividend, I want to buy 2 weeks before because I want to make sure that I am there as the stock goes up. Now, why do stocks usually go up before the dividend? Well, because most companies experience what is called a flood of investors buying the stocks just to collect the dividends. Jake, you don't want to say hi? No. Stick your head in and say hi. People love you. Say hi, Jacob.
Hi, guys.
See you later, Jake. So, anyway, I want to buy 2 weeks before the EX date because the stock has a tendency to go up. And that's what I want. I want that 1% per week. So, date number 3 is the date of record. Okay, right here. See? Date number 1, date number 2, date number 3. The date of record is whoever owns the stock on that date is entitled to the dividend. That's why people buy stocks before the EX dates. Because if you buy it 1 day, 2 days, 10 days, 15 days, whatever, before the EX date, you are entitled to that dividend as long as you are the owner on the date of record. Okay, date number 4, self-explanatory. That is the payment date. That's when they pay you the money. If the stock price declines so much the call doesn't cover the offset, do you eat the loss? Absolutely not. Remember rule number 1. Okay, you asked about the rules. Rule number 1, never buy something you do not want to hold long term. If you think the stock is going to go down and you feel uncomfortable, well, don't buy it. Don't ever buy something you don't understand, you don't want to hold, you can't explain easily. Make sure the numbers all work. Are they profitable? How consistent are they with the dividend increases? What are the you need to do your due diligence. Every single dot on here, okay, is on Warren Buffett's list. On this here, they should be no-brainers, because if they're good enough for Warren Buffett, they should be good enough for you and me. No time frame needed to hold, I assume. No, not at all. So you rotate in and out of stocks as they near the dividend dates. Yeah, that's correct. Genius, yep. No time frame needed to hold, I assume. Nope. As long as you own the stock. Okay, here's the thing. As long as you buy the stock before, see little green dots? Okay, so if I want to collect the Chevron's dividend, okay, which is right here on the 17th, I would have to buy it on the 16th, the 15th, the 14th, the 1st, the 10th, the 9th, the 11th, the 31st, anytime before the EX date. Because the EX date, okay, is always, well, usually always one day before the date of record. Do you sell your shares before the dividend gets paid or hold through? Milo, no. Okay, we're going to get at that in a minute. Okay, so just hold up. What I'm saying is the very first step is find a decent company. And it's really not that difficult. You ready? Hope you guys got a pen and piece of paper. Here it comes. Dividend Kings. 54 companies that have increased their dividends for more than 50 consecutive years. Go to Google. Google, honey, Linda, hi, honey, good evening. Konnichiwa. Anyway, go to Google, Dividend Kings List 2024, and it's going to bring you a list of all the Dividend Kings. 54 companies that have increased their dividends for 5 decades or more. That means 50 years or more. Thoughts on MU? MU is on the list, Mike, and it is a good company. We will be looking at it a little bit later, because here's the list. All right, this is the list for this week. Okay, we are right here. And actually, look at that. Isn't that a coincidence? MU is on the top of the list. All right, we are here. Okay, we're here. Going to go down this list here, and then we're going to come up to this list here and go all the way down that tonight. All right, but the funny thing is, Mike, I didn't plan it. Okay, but Intel was the last one we looked at last night, and the one right under Intel, MU. Isn't that weird? Dell is Dell. Oh, that's a freaking coincidence and a half. Mark, check it out. MU first, right there. Dell is second. So MU and then Dell. That's a sign. Well, I don't know if it is or it isn't. Okay, so first thing, always find your list. I wasn't finished yet with the list. Okay, Dividend Kings, 54 companies that have increased their dividends for 5 decades or more. Okay, but then we got Warren Buffett's list. So we're looking at back here. Okay, then you have the Dividend Aristocrats. Okay, the top of the food chain, 25 years of increased dividends. 25 years of increased dividends. Now there's the Dividend Champions. They also have 25 years of increased dividends, but they're not as strict as the Dividend Aristocrats. The Dividend Aristocrats are really picky. I think there's like 64 Dividend Aristocrats and 150 Dividend Champions. And then you go to the Dividend Contenders, 10 years to 24 years of increased dividends. That's over 300. So that lists, those 5 lists I just gave you, Dividend Kings, Aristocrats, Champions, Contenders, and then Warren Buffett's list. That 5 list right there, there's a lot of 5s, isn't there? 5 criteria, 5 rules, 5 business plans, and then 5 lists. I got to come up with one more thing that has 5. Call it the 5x5 trading rules. Ooh, that's pretty cool. All right, so anyway, what was I just saying? I know MU has earnings coming up this next week. Okay, so first thing to do is come up with your list. All right, go in to the fundamentals and find out the information you need in order for you to feel okay with a company. Now, for me, when I see Warren Buffett's list, it's a no-brainer. I don't even look because I know that Warren Buffett has already done all the legwork. So if Warren Buffett says, hey, I like Visa, well, I'm going to buy Visa also, depending on if remember, rule number five, if the numbers work. And we're going to cover that in a minute, okay? So, Apple, Jefferies, UPS, Capital One Finance, DHI, Wells Fargo, I never question them. If they pop up on my calendar, because I'm strictly a calendar investor, all right? Now, on Mondays, I will look at whatever stocks are coming up for the week. And that's all I will look at. I won't look at these. I won't look at those. I won't look at those. I only look at those that have their dividends coming up within the next 2 weeks. The reason for that is because stocks have a tendency to go up before the dividend, basically 10 days before they have their EX date. That's when I want to jump in. I jump in on a Monday, always on a Monday, okay? I sell my option on a Monday because as the time progresses, okay, once Friday, 4 o'clock comes, most of the options that I sell, I'm a seller, I'm not a buyer. Okay, I'm looking for that 1% premium, and we're going to cover that in a minute or two. I'm a seller. My biggest thing I want is sell it on a Monday, and then by the time Friday comes, it's worthless, so I get to keep that money and just hold on to it. Where do you get that calendar from? Well, the calendar you're looking at is on Thinkorswim. Thinkorswim is a trading platform offered through Charles Schwab. Okay, you can download Thinkorswim. Everything I'm going to show you on here is live on YouTube. So you can go to YouTube to the 10-minute trader. I think I have it open. Yep. See, the 10-minute trader on YouTube, right? And you click on live, right? Okay, 2 lives. This one just showing the screen with me up in the top corner, and then this one right here, my big pretty face. Okay, those 2 are live right now. All right, this one over here is exactly what the screen is that you're looking at, so that you can see all little tiny numbers. Okay, hold on a second. Yeah, see all these little tiny numbers? When I tell you I buy it for this price, sell it for this price, and this is what I'm collecting, you probably can't see that on your phone or on your tablet. That's why this is live on YouTube. This whole screen is live on YouTube. So you can sit in front of your big screen TV. Okay, this is the TV I got here. It's a nice, what is that, 60-inch? Nice 60-inch TV. I can sit back on my comfy couch with a popcorn and soda and just sit back and relax. No, I don't do puts. Thank you, Marco, sorry. All right, so anyway, step number 1, find your list. Okay, find a list of stocks and make sure everything on that list you are okay with buying and holding for a long period of time. So if you look at a company, ATVI, and you think to yourself, who the hell is ATVI? Well, let's forget for a minute that it's owned by Warren Buffett, so it should be a no-brainer, okay? Just, look at the information. What do they do? What are their profit margins? How often have they increased their dividends? What is their year-to-year profit? Okay, there's lots of information you find on fundamentals to find out whether or not you like the company. Can you cover a stock that may be on your dividend list, but the stock is trending on the downside? Oh, DJ, of course, we'll get to that. Okay, we're still at 9:30. Dude, we're going to be here for another 2 hours. Trust me, you're going to see some stocks. Oh, as a matter of fact, look at this one. You ready, DJ? Look. Paramount. Oh, let's pull it up. Just quickly. Whoops. Oh, no, how about WBA, Walgreens? Oh, that's a good one. Check it out. Okay. A year ago? Today. Look where it was a year ago. 32 bucks. Oh, look where it is today. $15.97. That's a huge drop. Okay, that's over a 50% drop. Okay, so we're going to go on to that. Yeah, Marco, of course it's down. But we're going to take a look at it closer to see why I like it so much. Okay, so let's finish up with the example that I'm giving you. First thing, like I said, find your list. Find the stocks that you would buy and never question it. Okay, if it is on my calendar, I don't have to look at the details of the company because I've already done it. It's already on my list. All right, so that's number one. Number two, here's number two. Are you ready? I want to know, what am I paying for it? Now up here, this top line here, this is why this is live on YouTube so that you can actually read it. Amanda Charia, is that right? Amanda Charia? Hi, how are you doing? Nice to see you here on Instagram. Damien, how are you doing on Facebook? All right, you got to help me out with that name, Samson. I'm just going to call you Samson because those other names are a little tough for me. How you doing over there on Facebook, Samson? Okay, you got that, Marco? Hey, Doc's here. How's it going, Doc? Hope you got my email from earlier, my text message from earlier. I need to know where I'm going next week. I mean, this Sunday. For all of you guys that are in the southern Florida area having a party over Doc's house this weekend, come on down. Everybody's welcome. Damn the multiple platforms. Not bad, James. Yeah, we got YouTube, TikTok, Facebook, Instagram, and I'm looking to add 2 or 3 more by the beginning of the third quarter, which is at the end of the month. So I got like 1 week to figure out how to get a couple more up and running. All right, let's get back to where we were. All right, after I picked my stock, after I look at my calendar, that's step number 1. Look at the calendar. What's up for consideration this week? That's all I want to look at. Now, it's called the 10-Minute Trader for a reason. So if you've seen any of my videos, hey, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader. 10-minute trade. It should take you no more than 10 minutes to figure it out because we all know we wake up in the morning. Oh, it's Monday. Oh, it's Tuesday. Oh, it's Wednesday. We already know. Okay, now, for those of you who don't know, I do have a morning trading group where we trade live on a Zoom call. You actually get to watch the stocks that I am actually trading. Is this Bitcoin trading or what? I don't still get it. All right, Amanda, you're new here. I understand that. Main thing, the main number one thing, Amanda, that I want you to understand is, does it make sense? Okay, we're looking to invest in dividend stocks only, specifically those companies that have increased their dividends for more than 20 consecutive years. Because we all know, if we're business people, most companies go bankrupt after 3 to 5 years. 1 in 100 will make it to 10 years, 1 in 1,000 will make it to 20 years. So if I'm only looking at companies that increase their dividends for 20 consecutive years or more, they must be doing something right. So if you're thinking of investing your money, ask yourself, does it make sense? Much better view on YouTube. Yes, it is. Big Kahuna, how you doing? Marco, James, continue your lecture, my friend. It's getting interesting. Okay, thank you there, Marco. Okay, so as I was saying, Miss Amanda, okay, I don't do Bitcoin. I don't do Forex. I don't do futures. The only thing I do here is safe, predictable, consistent. 1% per week. Ben, Ben is going to be a no because they're a monthly. But I'll take a look at it. Ben. It probably won't be tonight because we get so many on the list. Just sub to YouTube. Yeah, all right, Milo. Okay, so as I was saying, Dundee, 44, how are you doing? Okay, so Amanda, just sit tight. All your questions should be answered as the night progresses. I'm usually here. Well, I'm actually here every night between 9 p.m. and 11:30 p.m. That's all I do is just go over stocks over and over again. They're monthly. Okay, sorry. Yeah, we're going to get to MU. Just hold on a second, Mike. All right, so as I'm saying, first thing is picking out your stocks. Second thing, look at your calendar. What stock is coming up for this week's consideration? That's all I want to look at. Should take me less than 10 minutes a day. 10 minutes a day is less than an hour a week. Now, I make 1% on that 1 hour a week. So I share 2 accounts with you guys. I have 6, but I only share 2. Okay, one has 117,000 in it, the other one has 200,000 in it. So 1% per week on $100,000 is $1,000 a week. Now, if it was a $50,000 account, it would be $500 a week. And that is still 1 hour of work. Okay? Safe, predictable, consistent, 1% per week. So whatever you're starting out with, 5,000, 10,000, 100,000, $500,000, whatever. We're all different. We all have different amounts of money to our name, but we all have the same thing in common. We want to take our money and keep it safe and get some type of return. How do you make money from this, mate? Well, Amanda, sit, chill. It's all going to be explained as we go along. Ready? That's good money, yes, but it is boring as hell. Why? Because I will look at Walgreens, WBA, every single day because I like it. All right, and every week I do it's the same stocks over and over and over again. I look at 300 different stocks. I will buy Lowe's the first quarter of the first week of the first quarter of every quarter. So first quarter of week 1, I will buy Lowe's. Second quarter, first week, I will buy Lowe's over and over and over again. Okay, Parkes, you got a long way to go with $100. How about PDI? We'll write PDI down. PDI. Okay, well, let's finish up with the example because some people want to know, see how it works. Okay, money isn't boring. Green isn't boring. Yeah, I get that. Is there any lot size involved to leverage? Yes, you can leverage if you want. I'd suggest you don't do it until you understand what it is you're doing. 500 a week, 1,000 a ball a week. Yep, is 1%. Yep. You buy shares of Lowe's or calls. No. I do covered calls. Covered calls is one of the absolute safest strategies there are, which means I have to buy the stock first. Okay, I have to own the stock before I can sell my rights. Okay, I sell my rights away with a covered call. So, first thing I want to see, once I decide which stock I'm looking at, in this instance, we're looking at Walgreens, is $16. That's what I can pay for it first thing Monday. Because we're on Friday, there's no trading today, no trading tomorrow, no trading Sunday. First thing Monday morning, this is what I can pay for it. $16. Great. All right, so what am I selling it for? If I'm buying it for 16, I'm going to sell it for 16. Okay, and this number is freaking ridiculous. Look at it. If I buy it for 60, sell somebody the right to buy it from me. See if you can wrap your head around this. I'm buying it first thing Monday morning, 9:30 a.m. That's when the stock market opens. 9:30 a.m. Eastern Standard Time in New York City. Okay, 9:30 a.m. I buy it at $16. At 9:31, like 5 or 10 seconds later after I do the first one, I'm selling my rights. Okay, I'm giving someone the privilege of buying it from me for the exact same price I paid for it. So the stock doesn't have to do absolutely anything. But here's what I'm getting. If I buy it for 16, I sell a covered call, the safest strategy there is, at $16 strike price, which means whoever buys it from me can buy the stock at $16 anytime from Monday morning all the way to Friday afternoon. What happens is Friday afternoon at 4 o'clock, it expires. So they either do something or they don't do something. DeBarney, Dar Benley. Why don't you recommend leveraging if you're only going to multiply the same 1%? Mr. Wayne, hey, Mr. Wayne, how you doing? All right, Dar Benley, you can leverage it using a, hold on a second, margin account. Margin account allows you to double your money. So if I put $50,000 in of cash, I can borrow $50,000. However, margin account, you are paying for that. You have to borrow it, and then you have to pay interest on it at the end of the year. So you can do that, but I suggest you don't until you understand what you're doing, and then you get good at it. Okay, so let's take a look at the numbers. If I'm buying it for 16, selling somebody the rights to buy it from me for 16. So what am I making on it? I'm not making any money on the stock. I really don't care about the stock. Really, honestly, I don't. What I do care about, they got a dividend coming up in a couple weeks. Is it the right time? I want to look at the chart in a second. We're going to look at that in a second. Okay. Do they consistently increase their dividends? Do they have a dividend coming up? And what do the numbers look like? Well, here's the number. $16. I can buy it for 16. I can sell someone the rights at 16. Look what I'm catching. 62 cents per share. Let's do some quick math. And Amanda, here's where the math comes in. See if you understand this. All right, bring my calculator up. Calculator, here we go. If I'm buying it for 16 and I'm selling it for 16, think of it this way. Let's say, hypothetically speaking, you call up your neighbors, hey Joe, or hey Marge, or whoever. Hey, I'm running down to the store. You want me to pick you up something? Yeah, pick me up a case of whatever, whatever, whatever. Great. It cost me $16 to buy it. They're giving me the $16. But for that privilege, they're giving me 62 cents per share. So what does 62 cents per share mean? Well, I put it in my calculator. 62 cents per share, that's my profit. Okay? What is a covered call? Mr. Wayne, I'm explaining that at the moment. A covered call is where you buy the stock first. Okay, you got to own the stock first, and then you sell some of the rights to buy it from you for basically the exact same price you paid for it. So, in this instance, if I buy it for 16, I sell my rights at 16. That means someone can buy it from me at $16, what I just paid for it. But they're giving me 62 cents per share. That's my profit. What does that mean? Well, 62 cents per share on a $16 stock divided by 16, that comes to a grand total of 3.875. That is almost 4% for 1 week. So what happens to the stock? Well, the stock at the moment is at $15.97. Okay, we're going to take a look at the chart in a minute, and you'll see why it's so freaking cool. Really? So freaking cool. This is about buying coins and getting more profit of coins. Yeah, no, it has nothing to do with coins whatsoever. I don't do cryptocurrency. I don't do coins at all. We're talking about Walgreens. There is a Walgreens in almost every major city in the United States. Okay, this is not I don't know who the heck that is. No, this is Walgreens. Do you relinquish your shares when the call gets sold? Yeah, no. Okay, Parkis, you own the shares. Okay, if I'm buying the shares at 16, those are mine. I own them. Okay, whoever buys this from me, the 16, pays me the 62 cents per share. They only have the right to buy it from me at 16 between Monday and Friday, because on Friday the option is going to expire. Okay, that's one of the bad things about options. Okay, they expire. Okay, 21 June, well, they expired this afternoon. 28 June, that's next Friday. 5 July, that's 2 Fridays away. And then it goes on and on and on. That's a weekly option. Okay, so if I buy it at 16, sell somebody rights at 16, they give me 62 cents a share. 62 cents a share is 3.875% for the week. So much for the 1% per week. This one's giving you 3.5. 3 point what? All right. Do you have a video you're doing it live with the application during the work so that I can understand? All right, Journeyman Grace. This is live right now on YouTube. Okay, so I've been doing this since the beginning of January. So you can, I don't know how many of them are live that you can actually see on YouTube. Hold on a second. I'm going to show you something in a minute. How did you do this week? I made over 1% this week. We love the explanation. Thank you, Marco. All right, so Amanda, that kind of makes sense. So if I'm buying it for 16, first thing Monday morning, I sell some of the rights to buy it from me at 16. Okay, they're giving me 3.875%. That's almost 4% for the week. And what does stock have to do? Well, at this moment in time, the stock is at $15.97. But look where it was a year ago, 32. It's dropping. Why am I excited about its dropping? What's the YouTube channel? The 10-Minute Trader. Lauren, which ticker do you trade covered calls in? Well, Lauren, we're looking at Walgreens at the moment. So if you buy 500 shares and someone buys the call, you get the profit and you keep the 500 shares. Okay, Parkis, hold on a second. I think you finally get it. Okay, so if you're buying 500 shares, here's an idea. Let's do a quick example. You ready? If the call option does not get called when you sell the stock, all right, hold tight for a second. So what we're going to do, we're actually going to do an example. All right, we're going to do an example in a minute. Let me show you the chart first and tell you why I'm excited about Walgreens. All right, now we can all see. Okay, the first thing I want to look at when I look at a chart is 5 things I want to see. There's another 5. You ready? 5 things I want to see when I look at the chart. High of the year, That's 1. Low of the year, that's 2. Where was it a year ago? That's 3. Where is it now? That's 4. 5. What direction is it going? Okay, from high down to here. That's the 5 things I want to see when I look at every single chart. Okay, great. I'm kind of interested right here, and I'm going to explain to you why I'm excited about what is right here. All right. Let's do it. So you collect the premiums after selling the stock. No, DJ. I don't sell the stock. I buy the stock. I have to own the stock in order to be able to sell a covered call. Let's look at it this way. Let's say you have a car in your front yard. You can't sell that car unless you own it. Okay, so if I sell the car, I put a for sale sign on it, say I want $1,000 for it. Let's say Tom comes down the road. Ooh, I like your car. Let me give you $100. Hold it for me until Friday. He comes back on Friday. He either gives you the money for the car, or he says, you know what? You keep the money. I don't want the car. Sell it to someone else the next week. Okay, so you have to own the stock before you can do a covered call. Okay, so I like the 1 year chart, the way it looks. Great. What do I want to see next? Well, a year ago, we were at 32.45. We ended the year at 26.90. Okay, 26.90. Here's December, January. Buy the stock, sell the covered call. Wade, that's absolutely right. I'm still confused on what happens. Hold on. All right, hold on, DJ. So you collect the premiums after selling the stock? No. Collect the dividend as well? No. DJ, sit back, relax. Try not to make it more confusing than it is, because it's not confusing. Don't confuse it. All right. Now, I'm still confused on what happens to the original shares after the call is sold. Okay. Parkus, you ready for this? If I buy 500 shares at $16, I'm going to do an example so you actually see. All right. If I buy on a Monday, buy the stocks on a Monday, I own them at $16 per share. On Monday, let's get rid of this. Let's look up what WBA. Okay, 18 right there. See it? Walgreens. Right there, Walgreens. They're paying on a 48-cent dividend. All right? Now, if I want to buy Walgreens, it's paying out a dividend on the 18th. I want to buy it 2 weeks before the dividend on a Monday. Okay? 1 week, 2 weeks. Monday, the 31st. I pay $16 for it. I own it at $16. So I get 500 shares. Okay, 500 shares at $16. I own 500 shares at $16. Okay, I sell the option at $16. If Friday comes, okay, Monday through Friday, the option is going to expire. It will expire at $16 or higher, $16 or lower. If it's lower, I keep the stocks, and then I do it again on Monday. Sell an option. If it's above 16, great. If it's not, okay, I will do it again at 16. Because remember, when you buy a stock, what never ever changes is the price you pay for it. So if I pay $16 for the stock, I can hold it all month long and do a covered call every single week, all month long, until it goes over $16 and I get bought out. So if I'm buying it for 16, okay, if it's over 16 on Friday, I get all my money back and I get to collect the premium. And the premium is already over 3%. So I paid 3% this week rather than the 1. Okay, so let's keep going back. Let's go back. For this who not understand, see the YouTube, what is a covered call? Yeah, go to YouTube, look it up. What's a covered call? You can sell shares whatever you want. If you sold a call, you have a commitment. That's correct, Lauren. You're 100% correct. If you sell the call to someone, that means they have the rights to buy it, and I can't sell it until that option expires. You have good advice, actually, and deserve a follow. Well, thank you for that. All right, done with the questions. Okay, so let's get back to my example. Gotcha, genius. Every time you renew the call, do you pay? No. You don't pay for it. Somebody pays me. If I'm buying the stock, see, the only thing I got to pay for is the stock. Okay? I sell my rights to somebody every Monday. Hello, everyone. Jeffrey, how are you doing? But lost. Listen to the man. He's trying to teach us. Okay, thanks, Damon. All right. I bought shares as a limit buy. I can only make money if the stock goes up. No. Okay, Lala, just sit, chill, relax. I'm here till 11:30. Make sure. See, whatever you guys do, what I want you to get out of this is one question. Does it make sense? Do you work with Charles Schwab Fidelity? What would you suggest? I don't really like Charles Schwab. I use Charles Schwab because I like Thinkorswim. It has everything I want on there. I've been using it for over 15 years. Folks, keep it down. He's teaching. Yep, thank you. Does you invest approach the same as Warren Buffett? No, totally different. Warren Buffett's a buy and hold. Okay, there's a reason why you can't buy Fruit of the Loom, Wrigley's gum, Mars candy bars. Then there's a few others. I think Duracell. There's a few reasons why you can't buy those stocks. Because Warren Buffett owns all of them. Okay, he buys and he never sells. That's not what I'm looking for. I feel like I'm buying and holding now. Well, Lala, that's the intention, to buy and hold. That's not what I do here. I rotate. Okay, I take whatever money I have and I use it to its limit, 1% every single week. And if I didn't get 1% every single week, I'd still be working, which I don't want to do. I asked that already. The answer is don't buy anything you don't mind holding for a while. Yeah, Parkes, good question. Good answer. There's risk in your stock tanking if you don't get called away, correct? Well, I'm not going to lie to you. Okay, the longest I've ever held anything is 9 months. I'll buy something. What never changes is what you pay for it. What does change is it goes up and down in value. Okay, so if I'm buying on a Monday, I'm buying at 16. This is still the same example. But buying it at 16, Friday comes and it's at 15.98. Well, I'm still going to own it because I sold this rights at 16. No one's going to buy it at 16 if it's 15.98. Okay, but if comes Friday and it's at 16.50, 17, 18, 20, whatever, as long as it's over 16 come Friday, I'll have all my cash back and I still get to keep the premium. The nice thing about the premium is you get it instantaneously. As soon as you sell it, it goes right to your account. I have a credit card and a debit card attached to my trading account. 98% of all my money is invested at all times. I make all my money on a Monday because that's when I sell all the options. Do you need to, you guys keep counting these questions, I'm not going to be able to get to anything. So interesting. Yep, glad you like it. Do you need to keep on top of this every day? Now, I'm trying to figure out the right words to say without insulting you when it comes to every day. Now, this trading strategy is called the 10-minute trader. Okay, my daughter was 9 years old. How do you teach a 9-year-old to trade stocks and not lose? What happens when a 9-year-old little girl loses money? Well, she's going to cry, and then I'm going to feel like crap. And then you know what happens? That will make me feel even worse. Yeah, Mama will come in because the daughter's crying, and then I get it twice. Okay, so anyway, yeah. So it was created for a 9-year-old little girl. It had to be simple. Please don't make it more complicated than it needs to be. It has to be simple, safe, predictable, consistent, and no way she could lose. I created it back in 98. In 08, okay, 2008. Okay, I created the strategy for my daughter in 2008. Oh, for those guys that are new, I'll show you this right here. Videos. You'll like this. This is kind of funny. Oldest. This one. Here's the princess herself.
Hi, I'm JC, and you being part of my internet website club thingy, which my dad doesn't like me calling it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from.
All right, so that's my daughter. Every month, that's 12. Yep. I had more hair back then, okay? But it was 12 years ago. All right, so I've been doing it for quite a while. Got my girlfriend doing this. She only has Macy's, working out good for her. Well, good. I know I make money on covered call premiums that you sold, but if the stock tanks, you'll lose money. All right, Crispy, no, that is not true. Okay, so what never happens, okay, this is something you need to understand. All right, let me go back to here. We've already done that. And let's go right to here. All right, Crispy, you ready for this? If I buy the stock at 32, okay? Now we talked about this one. The high of the year is 32. The low of the year is 16. Now, if I bought it at 32, okay, they're paying, I think it was a 48-cent dividend. Okay, so if I get 1,000 shares at 32, I'm getting 320 bucks. All right, hold on. Got to prove I am who I am. They check me on me every once in a while. Okay, so you ready? If I buy 1,000 shares at 32, right? The dividend is 48 cents a share. 1,000 shares, that's 480 bucks, right? Okay, so now the stock is worth $15.97. I still have my 1,000 shares at 32 because remember rule number 2? Never sell at a loss. What is happening when the stock is at $15.97? Well, I have 1,000 shares. This company continuously increases their dividends every single year. So whether I bought it at 32 or 18, I'm still getting that 48 cents per share, which is 480 bucks. So at $32, I'm getting 480 bucks per quarter every 90 days. Okay, it's down to $16. How much am I making? $480. How much am I making next year? Well, I'm making more than $480 regardless of where the stock price is. Because what never changes is what you pay for it. You never lose until you sell for a loss. So if you lose money, it's your own damn fault. Okay? Okay, I am from Generation X. We don't care about your feelings. There is no safe space here. If you buy it at 32 and you sell it at 18, that's your own damn fault. Okay? Rule number 1, never buy something you do not hold long term. Never sell at a loss. So if I buy 1,000 shares at 32, I'm getting 480 bucks. If it's down at $16, I'm still getting 480 bucks. Okay, next year I'm getting more money because the company continuously increases their dividends. Okay, yeah, the stock can drop, but until I sell it at a loss, there's no way to lose. Okay, I hope you understand that. You are in control of the stocks that you buy. And I'm going to answer the other question with someone else. Do you have to look at this every day? No, you don't have to do anything. You can buy Walgreens and just let it sit there. Buy 1,000 shares, get you $480 every quarter. You don't have to do what I do. I do it because I got nothing else to do. I'm retired. Okay, so I take my little chunk of money, I buy my 5 or 6 positions, I make 1% per week. It takes me 10 or 15 minutes to do my own stuff on a weekly basis. My own stuff. Teaching you guys is a little bit more time and effort, but I enjoy it. I'm actually having fun, and I'm actually helping people. I get comments all the time. Thank you, making money. There's a few comments here tonight. I've been making money. Whatever. Okay? Now I got tired of being screwed over because, yep, I'm part of the masses who, get the short end of the stick. Hey, put all your money into this CD. You can get, 1%. Yeah, no thanks. That doesn't work for me. Okay? Super savings account, 5% per year. Yep, that don't work for me either. Okay? I'm very picky with what I do. If I can control it, great. I want in. All right? Walgreens, it's a major company. It's in every major city in the United States. Why wouldn't it be on my list? And now, we haven't gone over this yet, but we're going to get there. Okay? So, why would I be excited about it being down here? Well, I'm going to show you right now. You ready? Last 90 days. I want to look at the last 90 days. The reason why I want to look at the last 90 days, because that's the last 3 months. 6 months ago, totally different world. 3 months ago, not that bad. Okay, so 90 days ago, here we are, 21. Okay, 5 things I want to see. The high, the low, where was it, where is it, and which direction it's going. That should take you less than 3 seconds. High, low, where was it, where is it, what direction is it going. There you go, 5 things right there. Okay, The high, 22. The low, 1460. Okay, where was it? 21. Now it's at almost 16. Great. What do I want to see now? Well, right now, I want to see the last 30 days. And this is the part that gets me excited. Let me show you why. Because, do you still do covered calls when your stock price is less than what you paid for it? Exactly. Sure I do, William. Why wouldn't I? James, can you please answer? Uh-oh. Somebody had a question. 7791. All right, where's the question? 7791. All right. Talk to you. I've been meaning to talk to you. Okay, 77. Hey, James, meaning to talk to you. All right, I don't see any more questions you got there, 7791. Okay, so I'm going to tell you what I tell everyone else. You really want to talk to me, DM me with your phone number. I'll give you a call. Okay? But just answer the phone when I call. Right? Now, I do call people every day. I like talking to people. Okay, got it. All right, where are we? What stock? The stock we're looking at now is Walgreens. So let me finish showing you why do I like Walgreens, especially the last 30 days. Now, we had somebody on last night and saying the stock right here on the 28th, do you see it right there? That's the low. That is the low of the 7-year period. Okay, the 7-year period. You can't get any lower than the low of the 7-year period. So why does that excite me? Well, because it can only be one high and there can only be one low. So let's take a look. The 30-day high, 1775. Cool. 30-day low, 1460. Okay, great. So you get the high, drops down to the low, and then where does it go? Well, it goes back up again. It's never been this low in 7 years. So why do I like it? Well, because it's Walgreens. It's been in business for over 100 years. It's in every major city. They got a dividend coming up and at an all-time low. You can't get any lower than that. How do you make money in the stock market? You buy low and you sell high. Well, hello, it doesn't get any lower than that. All right, not that I'm not suggesting you buy it. I'm just saying it doesn't get lower than the low of a 7-year period. Okay, there's the low, and she goes up, back down again, back up. Where do you think she's going to go next? Okay, what stock? So you hold the stock? No, I don't hold the stock. I buy it. Okay, so right now, the example I'm giving with Walgreens, at this moment in time, first thing Monday morning, the bid is $15.95. If I own it, that's what I can sell it for, $15.95. If I don't own it and I want to buy it, I'm going to pay $16 per share. Now, if I buy it at $16 per share, we're actually going to do a trade right now and show you what it looks like. So, I like Walgreens at $16. So, I am going to put a trade on right now. It's not going to execute because the market is closed. It's just as an example to show you how it works. First thing I want to do is I want to change this right here to a covered stock, which means I'm buying the stock and selling the option all at the exact same time. Okay, so I'm buying and selling at the exact same time. So I'm doing 2 trades at once. It's right here on Thinkorswim. I like Thinkorswim. Now, I don't get paid for suggesting Thinkorswim. Now, I've been trading for over 20 years. It took me a while to find this trading platform. Okay, it was created by Tom Sosnos, who now owns Tasty Trade, right place. Okay, but he sold it to a TD Ameritrade. TD Ameritrade sold it to Charles Schwab, so Charles Schwab owns it now. So if you want to use it, you can download it free. They will let you do a free account for a while, but they prefer you to move your money over and use their trading platform so they can get your commissions. Yeah, it is what it is. It's all part of doing business. If you think you're going to get away from, paying to do business, yeah, it doesn't work that way. You got to pay to play. You're dancing to the music, you got to pay the fiddler. However you want to look at it. Okay, so we're actually going to change it to covered stock. Remember, I like it at 16. So let's actually go and show you what a trade looks like. So I'm going to trade this, and then I'm going to get rid of that. Now look what I'm looking at. Here's the calls on this side, the puts are on this side. I don't do puts, so I ignore that section. Now remember, I told you I liked it at 16. Here's the 16 right here. Now when I tell you that this is live on YouTube, which you can put on your big screen TV, because you probably can't see these numbers. You probably can't see these numbers on your phone or your iPad or whatever, your tablet or whatever you're watching it on, unless you're watching it on a big screen TV or on your computer. Okay, so the $16 right here, let me highlight it. Okay, the $16 right there, see it? See the highlight right there? Okay, now I want to come over and I want to buy it right there, see it? See that little tiny things right there that pops up, buy? All right, I want to buy that. And then we talked about 500 shares, right? And I usually buy it in 1,000 share increments because I like the numbers better. It works easier for me. So we're going to do 500 shares. Oops, 500. Okay, so let's take a quick gander. You ready? Here's the trade right here. Okay, it's a covered, which means it's a covered call strategy. All right, I'm going to sell 5 contracts, selling 5 contracts at the $16 strike price. See that? Okay. I'm also going to buy 500 shares of WBA stock. See, look, call. So I'm selling the call, and I'm buying the stock. Okay. Now, this is the price right here, and it's a limit order. When I do them both together, I like to do market order because they're already tied together. My profit is already in there, and it fills instantaneously. And I'm at that point in my life where I want my 1%. I'm getting more than 1%. I'm not going to quibble about a few pennies here, a few pennies there. You can set a limit order if you want, but here's the thing with limit orders. A limit order is put on the market maker's screen. He's the one who actually does the buying and selling for you. Okay? Now, limit order will just sit there until he's ready to fill it. A market order gets filled instantaneously. Okay, how do you find the date that the dividend is coming out? All right, user 1851. You use what is called an EX dividend calendar. You can go to Google, put it right up in the search bar, EX dividend calendar 2024. And you'll get a whole bunch of different websites that have EX dividend calendars. I personally like Thinkorswim because it's already there, and I don't have to pay for it. Okay, so here we go. I like doing it at the marketplace. We're only going to do 500 shares, which means 100 shares per contract. So it's 5 contracts, 500 shares. Let's see what the numbers look like. First thing I want to do, hit confirm and send. Okay, this is the actual trade, and I'm going to read it out loud so you can hear it. Okay, I always suggest people, anytime you buy or sell something, not only read it, but say it out loud so you can hear it and see it at the same time. I have made that mistake many times. Many of my students have made that mistake. Say, oh, yep, that looks right. Click it. Oh, no, that was wrong. Yeah, as soon as I click that send button, the send button, I own it. Okay, if I'm wrong, that's my own damn fault. Okay, there's no participation trophies here. There's no safe spaces. You hit that button, you own that stock, and you sold those options. So better make sure you are correct. That's why you read it out loud to hear what it is you're buying and selling. Okay, here it is. I'm going to buy 5 covered Walgreens WBA 100s. Those are the weeklies. It says it right there. Buy 500, buy 5 covered WBA 100s. Those are the weeklies. 28 June 24. That is this coming Friday. Remember, I do weeklies only. I don't do monthlies. They just don't pay enough. The numbers just don't work. I don't do the monthlies. They just don't work. Sorry. The 16 call. Remember, we went through this exercise already. I like it at 16. I can buy it at 16. I can sell it at 16. Great. All right. At the market, which means at 9:30 a.m., that will fill because it's the first trade the market makes. And he doesn't even have to see it. It's at the market, automatically filled. The nice thing about it is the stock and the option are already interconnected. So I already know what my profit is going to be. What's my profit? Well, it's right here. The break even. Break even is 1534. The stock can go down and I'm still going to be profitable. Imagine that. I'm buying it at 16. It's at a 7-year low and it's bouncing up to the upside. It's got a dividend coming up in 2 weeks. Why wouldn't I? Well, here we go. We're not done yet. Break even 1534. My maximum profit $330. Yeah, nothing great to write home about. Okay, so we're going to do $330 is my maximum profit. Great. Now, if I am doing all cash, it's going to cost me $7,673. Okay, 7,670. Whoops. Divided by what money I have to put up. $7,673. And whoops, what did I miss? Okay, $7,673. Okay, $7,673. Okay, see it? $330 is my profit divided by 7,673. That's what I'm paying for it. That's how much money it is costing me. All right? Equal sign, check that out. 4.3%. What does a stock have to do? Absolutely nothing. It's at $16 at the moment. So if the stock stays the exact same between Monday and Friday, I'm making 4.3%. Does it always come out that high? Oh, hell no, it don't. Very once in a while it does. Most of the time I average. When I say I average 1% per week, some weeks I will get 4%. Some weeks I'll get 0.7 or 0.8. Just miss it. But it's on average 1% per week, which is over 50% per year. That's what I'm looking for. Okay, so hypothetically speaking, those of you who are little gamblers, okay, we're going to go backwards here for a second, just a second. Okay, we're going to clear this out of the way. Remember, this trade is $330. $330. Now, if I have a margin account, which somebody asked about margining, okay, if I have a margin account, half of that money is not mine. That's borrowed money. So what do I have at risk? On a margin, I have at risk $3,677 of my own money. Remember, half of it's mine, half of it's the broker's. And I borrow that money, I need to pay interest on that. But if I'm making 50% per year, I have no problem whatsoever paying the broker 8% to borrow his money. Okay, fine. What does that equal? Well, I'm going to divide that by half, which right here, this is all cash, 7,673. Margin, it is 3,677. So divided by 3,677, it comes to a grand total of, you ready for this? Almost 9% for the week. 8.97% for 1 week. What does the stock have to do? Absolutely nothing. It's Walgreens. Let's go back to the chart and see if you understand this. All right, let's get rid of this because I don't want to send it. I already have Walgreens. I don't need any more. Okay, so at this moment in time, the stock is at $15.97. Let's get back out of that. Okay, let's pay this chart over here a little bit bigger. Okay, the 30-day high is right here. The 30-day bottom is right there. Okay, so she's going to the upside now, a little on the slow, but still to the upside. Okay, so at $15.97 come Friday, okay, if the stock doesn't do anything at all, let's say it stays at $15.97, what happens? Well, I still get my percentage from the premium. Okay, whatever the premium I sold, that gets into my account first thing Monday morning. Nothing to do with anything else. Into my account first thing Monday morning, I can spend that any way I like. Okay, 1,000 shares, that is 16,000 shares, that's $620 at 1,000 shares. Okay, now, if she stays exactly where she is, well, I keep that money and then I do it again next week. Well, what do we have next week? Well, let's take a look at next week. Next week, the 16 is going for 70 cents a share. Now, these numbers are going to change. Okay, they change every 5 seconds when the market is open. The market's not open at the moment, so these numbers are stagnant. They're just going to stay there. It gives us something to work with to work out our math problems. The math problems are always the same. What's my profit? Okay, how much I'm buying the stock for? What strike am I selling? What's my profit? Okay, and then I divide it by the purchase price. That's my rate of return for the week. So if the stock goes up, I make my money. Stock stays the exact same, well, 1597, that means next week I'll have to do it all over again. Sell the 16s again. But always go back to rule number 1. Never buy something you do not want to hold or you do not understand. I understand Walgreens. Okay, they've been in business for over 100 years. They have a Walgreens in every major city in the United States. They must be doing something right. They've been in business for a long time, and they increased their dividends. Let's answer some questions before we move on to the next stock. Okay. Joe, would you option it off if it dropped that much? Just father call date out. Joe, this is one of the reasons why I encourage people to join our live trading. Okay, so number 1, never buy something you don't want to hold long term. Number 2, make sure you never sell at a loss. Number 3, 20 years of increased dividends. Number 4, weekly options. Number 5, make sure the numbers work. What am I buying it for? What am I selling it for? What am I getting in return? And what is the chart telling me? The chart is telling me something. 30 days ago, it's at 1775. 2 weeks ago, it's at 1475. Right now, it's at 1597. It is closer to the bottom than it is to the top. Okay, so what happens when you have a 30-day bottom? Well, anytime you have a bottom, people want to buy low and sell high. So if you're at a bottom, people are going to buy it, expecting it to go up. So if it goes up, great. I'm only looking for the 1%. Really don't care if the stock shoots from 16 bucks to 116. I honestly don't care. Really, I don't know how to get people to understand that. I'm not looking for stock appreciation. I'm looking for companies that are just going to stay still and do absolutely nothing. Why? Because I want this, and I want it every single week. Now, this strategy has been working for me for 15 years. Okay, I grew up in that time where if it ain't broke, don't fix it. Okay, I really dislike it when people say, oh, this is great, this is new, this is updated. No, if it ain't broke, don't fix it. You want to know what? There's still some Model Ts built in the early 1900s that are still running and driving. Oh, here's a good one for you. The Mars rover. It's been on Mars for over 14 years with no maintenance, and it's still working. What does that tell you? Well, it tells you that we're getting screwed because we got to buy a new car every couple of years because they make it break down. If they can put a car or a rover up on Mars and it's consistently running effectively for 14 years with no maintenance whatsoever, why are we being screwed with the pieces of crap they're selling us? Okay, so back to what I was saying. If I'm buying it for a certain price, selling it for a certain price, collecting a premium, and it's over 1% per week, 1% per week, safe, predictable, consistent, that's over 50% per year. How long does it take? It should take less than 10 minutes a day. Rule number 1, step number 1, pick your stocks wisely. Okay? Very simple. Dividend Kings, Dividend Aristocrats, Dividend Champions, Warren Buffett's list, Dividend Contenders. Right there's over 300 companies. All have consistently increased their dividends year after year after year. Now, there's some companies, they increase them once in a while, but not consistently. Question, if your options don't sell and expire, you still own the shares, or do you buy them again? No. Marco, once you buy the stock, you will always own that stock until you sell it. Now, back to this one, if I buy it at 16, sell somebody the rights to buy it from me at 16. Come Friday, it's above 16. Yeah, Monday, they'll be all gone. I get all my money back, and I still get to keep the premium. The premium goes to me on Monday as soon as I sell it. Okay, I can spend it on Monday afternoon at noon. Okay, if I buy the stock Monday morning at 9:30 a.m., okay, at 9:30 a.m., I'm also selling the options, which that goes into my account, and I can spend it instantaneously. I make all my money on Mondays. Okay, I keep a little bit aside in case I have to do something on a Friday. So the trading group in the morning, Monday, Tuesday, Wednesday, Thursday, okay, 9 a.m. until about 10:30. Okay, I do the podcast, which means I do all my trading on Monday, first thing in the morning. Tuesday, Wednesday, Thursday, not a whole heck of a lot happens, but it's always good to get in and see what's happening with our stocks because nobody has more interest in your money than you. Okay, nobody has more interest in my money than me. I want to make sure. And how long does it take me? Less than 10 minutes. Now, if you have a big fat account and you're making 50% a year and you cannot afford 10 minutes a day to take care of your own money, are you part of that population that spends more time planning a barbecue on the weekend than they do with their own personal finances? That's a you thing. Me, I have no problems whatsoever taking a look at my account. 10 minutes, great. Because I know what I make in 10 minutes a day. All right? That 10 minutes a day comes to less than an hour a week. Okay, on a $100,000 account, that's $1,000 a week for 1 hour of my time. Most of the work is already done for me. If I go to the calendar, okay, I've already picked it out. I like Siri, I like Clorox, IBM, PPT, Wells Fargo, Citigroup, US Steel, Intel. I like all those companies. I have no problem whatsoever. I can't afford to buy them all at once, but what I can afford 2 or 3 this week. 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 Okay, 2 or 3, get my 1%. 2 or 3, make my 1%. 2 or 3, make my 1%. I have no problem with that whatsoever. Most of your work is already done for you. Dividend Kings, Dividend Aristocrats, Dividend Champions, Warren Buffett's list, Dividend Contenders. That's over 300 companies right there. Okay? You take a look at any one of those companies. They offer weekly options. Why? Well, because I already did the work for me. That's for me. You guys got to figure out what works for you. Okay? I can't tell you what to do. I have no idea who you are. I have no idea what your plans are. No idea what your risk factors are, your goals, your dreams, what you're willing to do, what you're not willing to do. But what I do know is I like Kroger. I like Clorox. I like Chevron, Hershey's, 3M. Look at Walgreens right there. Johnson & Johnson, Whirlpool, Aflac, JWN. Ooh, nice one. Bank of America, Baxter, Bank of America, both over 100 years old. And they got dividends coming up. Why wouldn't I buy them? There you go. That's my answer. Anyway, so that's a long story short. We've only looked at one company so far. So if we can cut back on the all the questions, we can start looking at some more stocks. Amanda, I'm not quite sure if you got any of that. Damien, Samson, okay, over on Facebook. I'm not quite sure if you understood all that. All right, so let's go take a look at some of these questions. China wrote on the wall in Jacksonville, Florida, Lane Ave, West Side, Jack's Inn Hotel, across from the room. I have no idea what that means, James. But $300 a week, is it worth it? Daniel, I can't tell you if it's worth it or not for you. Okay, at $300 a week, I'm assuming you're working with a $30,000 account. So $30,000 account, 50% per year, it's $15,000 per year or $1,000 a month. You figure it out. $300 a week is $1,200 a month. Okay, 10 minutes a day. It shouldn't take you more than 10 minutes a day. What's up on the list today? Oh, Wells Fargo, US Steel, Intel, Citigroup. Okay, if I can only buy one company, let's say I put $15,000 into Wells Fargo and $15,000 into US Steel, I make my 1%. That's $300. Great. What if I do it again here? This time I do Clorox and IBM. I make my 1% there. I do it again here. What? Capital One Finance and Target? Great. I make my 1% there. Aflac, Whirlpool, or Johnson & Johnson? Great. Make my 1% there. 1%, 1%, 1%, 1%, 1%, 1%. 300, 600, 900, 1200, 1500. I can't help you out if you don't like the numbers. Okay? Now, at some point in time, we're all going to retire. You got to figure out where to put your money. The way the man or the establishment would like you to do it is to give it to a money manager. What is a money manager going to give you? Oh, well, yeah, put your money here. We'll give you a 4% drop per year. If you can live on a 4% drop per year and you want to give your money to someone else to take care of, you're in the wrong place. Seriously. This is not for those people who want to hand their money over to someone else and say, here, you take, I don't want to do it, you do it. Okay, so I feel bad for you if you're at 60 years old or 70 years old and you're ready to retire and you only have 30 grand. All right, can you start trading with 50 bucks? Yes, you can. If you're strapped for cash, yes, but it's going to be a longer haul. But guess what? This little old lady who decides she wanted to go back to college to become a doctor. And then, the administration says to her, wait, you're 80 years old. You realize it's going to take 8 years to become a doctor? She says, yeah. Well, don't you think that's kind of, backwards or not right? She said, well, if I don't go to school to become a doctor, how old am I going to be in 8 years? See, whether you do it or not, it's totally up to you. Can you start with $50? Yeah. The commitment that you're going to put, hey, out. Sorry. Dogs come on in whenever they feel like it. It's up to you to decide what you want to do with your time and your money. I'm not here to tell anyone what to do. I'm just showing you what I'm doing. Okay? I'm inviting you into my house. Hey, this is what I do. If you want to watch and understand it and follow, hey, that's up to you. Okay? If you want to start with $50, great. What do you want to put aside every week? What do you want to do every month? How important is your financial future to you? Okay, Divine, by looking at your picture, it does look like you're over the age of 18 or over the age of 20. Whether you like it or not, your future is coming. Okay, at some point in time, you're going to have 3 options when you get to the certain age. Okay, when it comes to retire, we all retire eventually. Okay, 3 options. 1, age out. Do you know what that means? That means when your boss says, hey, buddy, you're just too old. Don't bother coming back anymore. Age out. Aging out. You're too old to work. 2, walk out. Hey, I made enough money. I don't need to be here anymore. That's walking out. 3, getting carried out. And we all know what that means. Body bag. Dying on the job. Yeah, no thanks. 3 options. And if you think it's not going to happen to you, you're dead wrong. Okay? Old age is coming whether you like it or not. Okay, invest for your future? Don't. It's totally up to you. I'm just sharing what I do. If you agree, fine, do it. If you don't, don't. It's safe, it's predictable, it's consistent, it's 1% a week, and I've been doing it for a while, and I'm going to continue doing it. Eventually, I'm going to open up my own, either a hedge fund, mutual fund, or some kind of fund that I can incorporate with the insurance company so that everyone can say, hey, let me guarantee you 18% per year. But they're having a little bit of a challenge getting over 12%. I got a friend of mine who does it, and he had a very hard time getting the insurance companies to guarantee 12% per year. So can you imagine that? 12% per year guaranteed, tax-free. That's freaking awesome. So I'm trying to set up a fund, and right now I'm doing the legwork. Okay, so I've been doing it for over 20 years, but now I'm actually putting up all my trades online so everyone can see them. So when I go to the insurance companies and say, hey, I need to create a fund so people can take advantage of this, I'm going to say, well, let's see what you've done. So they have 2 years worth of live trades, and the actual live show is what I actually do, a live podcast every single day. All right, let's go. What questions am I missing? So you get the dividend when you, all right, hold on, Craig. Tell me what you do. What do I do? It goes sideways for years, yep. Keep the premium, yep. All right, tell me what you do. All right, whatever. Daniel, point taken, not quite sure that one. Can you start trading with $50? Yes, you can. Parkus, learn. Stock drop value. If you do a covered call at a lower price, it gets called away, you lose money. Yeah, well, don't do that. William, I mean, it's a silly thing. Now, let's say hypothetically, okay, what William just said. Hypothetically, if I buy it at 16, what was the numbers again? Okay. At 16. Let's say I buy it at 16 and she drops down to 15. Okay. Can I still sell the 15s? Well, yes, I can. I wouldn't do it because if it's at 15, I'd still sell the 16s. Because, let me give you the cow analogy because some of you people don't understand numbers. My cow analogy. I buy a cow. Great. Love cows. Moo. Whatever. The cow gives me a gallon of milk every single week. I'm a happy camper. What happens? Let's say the cow only gives me a half a gallon. Do I get rid of the cow? No, I'm getting a half a gallon of milk. What happens if it gives me a quart? Well, do I get rid of it? No. Okay? So, if the stock drops, right, and then I have to sell out of the money. So instead of getting 48 cents a share, I'm only getting 32 or 20 or 15 or 10 or 7. It's the same analogy. So I'm getting a quart of milk or a half a gallon of milk. Okay, if I'm getting less than 1%, most people buy stocks and get a dividend every 90 days. Okay, so you have 52 opportunities to get a 1/4%, or 1/2%, or 1/8%. Most people buy it and just get the dividend, and that's it. And what is a dividend? Well, it's usually 3 to 5% yield per year. Okay, great. So let's say, hypothetically speaking, I only get a 1/4%, 0.25. Okay, a 1/4%. Multiply that by 52 because there's 52 weeks in a year. That comes to 13% at a 1/4 per week. What if I get a 1/2%? That's 0.5. Multiply that by 52. That's 26% per year. Most companies, all right, let's for the fun of it, let's do this. Walgreens. WBA. What we're looking at now, okay, on the big screen is going to be Yahoo Finance. Okay, Yahoo Finance. I want to look at the what do you call it? The summary for Walgreens. All right. So the dividend for Walgreens is $1. What is the yield? Well, it's 6.25%. Now let me ask you a question. All this time and aggravation, 1% a week, that's 52%. Or do you want to just dump your money there, get 6.25% and say, let someone else take care of it? It's totally up to you. You don't have to do anything that I do. I'm just showing you, I'm allowing you to look over my shoulder and showing you what I do to get a safe, predictable, consistent 1% per week. Now, if she drops down to 15, okay, I'm one strike out of the money. Let's go back up here. Let's get rid of this one. Go back up here. So they have options. One is called in the money, at the money, out of the money. Okay, so you see where the purple line is and the black? See, this is purple up here. This is black down here. Well, purple is in the money. Okay, black is out of the money. The line right here where they meet, that's at the money. Okay, so right now the stock is 16 bucks. At the money would be 16 bucks. Okay, at the money. In the money would be 13 bucks, 14 bucks, $14.50, 15 bucks, $15.50. That's in the money because it's already there. What is out of the money? 16.50, 17, 17.50, 18, because it's not there yet. Okay, in the money's here. Out of the money is higher. Okay, so you decide. One strike, at the money is where you get the highest rate of return. That's what I like to do. I like to buy it at 16 at the money and sell at the money and get the highest rate of return. The safest play would be the 15.5 or the 15. Yeah, you get a lower percentage rate coming in, but a higher probability of being back into cash. That's what I want to do. I'll put my cash out there and have it come back to me on Monday. Put it out there on Monday, okay? Have it come back to me over the weekend, and I do it all over again. Yeah, can you do the poor man synthetic cash secured puts? If you want to, I don't teach it here. Okay, now I have 6 different accounts. I only share 2 of you guys. What I'm sharing with you is 1% per week. That's over 50% per year. So ask yourself this question here, NIMS. Okay, if I'm sharing with you a strategy that gets 50% per year, what else do I have up here that I'm not sharing at the moment? Okay, I share a lot, but I'm a nice guy, but I only go so far. So I have a trading group, which we trade in the mornings. Now, you have to be in that trading group for a certain period of time before you get an invitation to see what I have up my sleeves. Because this one here makes 50% per year. I have other trading strategies that are pretty good that makes 100% or 200% per year. Why is that battery not charging? Batteries, ooh, that baby's getting warm. Okay, well, let's see if that charges. I don't know. We'll figure it out. Let's go, guys, over on YouTube. All right, so Yes. Yay. You can do poor man's synthetic comp. Yep, you can do that if you want. Stock drops value if you do a covered call at a lower price, get called away. Yeah. William, I look at my stocks twice a day. Okay, I have a trading group I do in the morning at 9 a.m. all the way until about 10, 10:15 or 11, whenever you guys are done asking me questions. I'll stay on until you guys finish asking me questions. I don't mind because I enjoy doing this. At night, I'm here every single night. Now, I'm committed to do this every single night for a whole year. Okay, so I've started at the first week of January. Okay, so at the end of this month, I will have officially done 180 whatever days, but only missed 2. Okay, I was sick one day, sick as a dog. I ate something terrible. And the other time, I went to the hospital. Okay, had to take someone to the hospital. So yeah, I only missed 2 days. Every single day I've been here. So for the rest of the year, I'm going to be here every single day. After the end of the year, I will decide what I'm going to do next. Okay, so next question, NIMS or debit credit spread. Yep. All right, we're not going to talk about those here. You may not make your 1%. All right, Wade, Wade's absolutely right. Sometimes, and I even told you that. Sometimes I make my 1%, sometimes I don't. But I do average over 1% per year. I share 2 accounts. I already told you that. Account number 1, all cash. That at the moment is at, I think, 31% so far. And we're not even to week 26 yet. We just finished week 25. Next week is week 26, halfway through the year, at the end of the second quarter. Okay, account number 1, already over 30%. Account number 2, already over 60%. Okay, definitely going to make my well, it looks like I'm going to make it. 6-pack, RJ 30-pack. John, can we go ahead and talk about another stock? Yep, we're going to. Glad you guys are finally done with that example. Let me finish up these questions. All right, let's do the questions first. How many platforms do you use? I use 2 different platforms. Thinkorswim, most of my trading. And I also have Robinhood. I love Robinhood. Simple, easy, quick. Nope, you have to pay. I have no idea what he's talking about. Did you attend college? If I did, what did I major in? What does that have to do with anything? Okay, I can get you a 3rd grader to say, oh, there's the high, here's the low. Oh, look at this. This says 16. Oh, 16 here, 62. I can get you a 3rd grader to say that. What the hell does college have to do with it? Seriously, it was created for a 9-year-old. If you can't figure it out and a 9-year-old girl can, I showed you the video of her. I mean, don't get me wrong. I love my daughter. Love her dearly. But, you know, here she is.
List number 1 is stocks that are paying out each year, and then
I love her to death. I do. But she's not a Mensa student. It was created for her. Okay? It had to be simple. It had to be safe, predictable, and consistent. And no way she could lose. So the 5 rules were: never buy something you don't want to hold long term. Number 2, never sell at a loss. Number 3, 20 years or more of increased dividends. Number 4, weekly options. Number 5, make sure the numbers work. Okay, please stop making it more difficult than it needs to be. All right, college has nothing to do with reading numbers and simple math. Okay, I can get you a 3rd grader to say, if I buy it for $16 and get a 62-cent return, what is that on a return for a weekly basis? Well, it's 3 point something. All right. Nope, you have to pay. 6-pack, I know what you're talking about. Craig. So you get the dividends. You must own the call contract and not the individual shares. Whoa, Craig, you weren't paying attention at all. All right. In order to collect the dividend, okay, let's separate the 3. You got the stock, you got the dividend, and you got the option. 3 different things. Okay, we can throw price in there. That's another one. Price, stock, option, dividend. However you want to isolate each one. Okay. In order to collect a dividend, just the dividend alone, you have to buy the stock before the EX date. These little green squares, little green dots, represents companies the day of the EX date. There's 4 dates to remember: the announcement date, the EX date, the date of record, and the payment date. The announcement date, simple. EX date is these little green dots, the last day the stock trades before the dividend is paid. The date of record, usually the very next day. Whoever owns the stock on the date of record is entitled to the dividend. Date number 4, the payment date. That's when you get your money. Okay, so if these companies right here, 3 of them, Aflac, Whirlpool, Johnson & Johnson, if they're paying a dividend here, right? Aflac, the 22nd. If I want to collect the dividend, I have to buy the stock the 21st, the 14th, the 16th, the 8th, 12th, blah, 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 before the EX date. If you want just the dividend, you have to buy the stock before the EX date. Okay? I only use the EX date to tell me who is paying and when. Okay? So if Aflac is paying on the 22nd, I want to buy it 2 weeks before the EX date on a Monday. 1 week, 2 weeks, Monday. Okay? It's really not that difficult. Try not to make it more complicated than it needs to be. It was created for a 9-year-old little girl. All right? Pick a good stock. Put it into a calendar. Whenever it comes up on the calendar, you want to do 2 weeks. Because, look, August 23rd, August, okay? 1st, 2nd, 3rd, blah, 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 blah. Look, the 31st, Bank of America, Baxter, eBay, General Motors, Kraft Heinz, Pepsi. I know every single one of those. And if I like those and I want to buy those, I want to buy them 2 weeks before this date. What's 2 weeks? 1, 2, Monday. Really not that difficult. Aflac, the 22nd. 1, 2, Monday. Okay? Ooh, 3M, the 18th. 1, 2, Monday. Don't make it any more complicated than it needs to be. If I want just a dividend, I got to buy it before the EX date. That's these little green dots. That's just the dividend. Now, the stock is a different story. The stock will change price every single day. You and I, we control that. What do I mean by that? Well, we buy, we sell. The market maker, just think of him as your corner store guy. He opens up his corner store. Hey, come on in and buy my shit. Okay? I can buy it for this price. I can sell it for that price. They're listed right there. It's not rocket science. If I'm buying it for $16, selling someone the right to buy it for me for that, that's what I'm collecting. Safe, predictable, consistent, 1% per week. Please don't make it any more confusing than it needs to be. To get the dividend, you need to own the stock. The premium, the option is nothing more than giving somebody else the right to buy it from me. If I buy it here, I can sell someone the rights to buy it from me anytime that the option is live. What does that mean? Well, that means 21 June 24, those options have expired. It's gone. These options right here, 28 June 24, okay, those are live until 4 o'clock next Friday. So if I buy it here, sell it here, 62 cents, somebody pays me that. If the stock goes up, more than likely they're going to buy it at 16. Whatever happens, they have the right to buy it from me at 16 because I sold him that right. Now, he's not obligated or she's not obligated. It's the right, not the obligation. Okay, you have the right to buy it from me. If you pay me this money here, 62 cents a share, you can buy the stock from me. So if the stock goes up to $18, $20, $30, I really don't care what it does. Honestly, I don't. I just want to collect this. I'm not here for capital appreciation. I'm here for boring, consistent, predictable, and safe 1% per week. I pick a good company. I make sure the numbers work. 16, 16, 62. Okay, 30-day high, 30-day low. Going to go to the upside. Great. Rule number 1, never buy something you don't want to hold long term. If you think you're going to get down, it's going to go down, don't buy it. It's really that simple. Why you ask me a question? It's like, well, what if I buy it and it goes down? That's all they do. Hold on a second. Let's put in something else right here. Okay. Microsoft. Okay, what do? Oh, look at this. It goes up, it goes down, 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 it goes up, it goes down. Stocks do nothing but go up and go down. They do not come to your house, make your bed. They do not water the garden. They don't trim the hedges. They don't wash your car. They do nothing but go up and go down. When's the best time to buy it? Well, it's the best time to buy it is at a low. Well, where's the low? Well, they're all over the place. Look, here's a high, here's a low. Here's a high, here's a low. Here's a high, here's a low. That's why I look every day. It takes me 10 or 15 minutes. What's on the list this week? Well, look, on the list this week, look. We got Nordstrom, we got Key, we got Knee, we got Corning, Bank of America, Baxter, eBay, General Motors, Heinz, Pepsi. How long is it going to take me to look at those 11 stocks? How long? Think about it. Okay, trade, JWN. JWN. Oops. JWN. Whoops. JWN. Are you ready? How long does it take me? First thing I want to see. Okay. High, low, where was it? Where is it? What direction it's going? What am I buying it for? 21.47 to 21.50, 27 cents. That's more than 1%. Didn't take that long, did it? Now, what we want to do, take a look at the last 30 days. Why the last 30 days? Because the last 30 days will give me a good indication of where it's going next. Okay, here's the last 30 days. Okay, 21, then she drops down to 20.25. She shoots on up to 23.50, drops back down, up, down, up, down. Where's it going next? More likely than not, it's going to go to the upside. But here's the main question. Main question, always, always, always. Do I like Nordstrom? Do I like Nordstrom at 21.47? If you don't like Nordstrom at 21.47, next, don't buy it. It's that simple. Okay, next on the list, Key Bank. Let's see how long it takes to do this one. You ready? KEY. I'm gonna hit the enter button. Let's see how quick it is. You ready? Enter. There we go. Whoops. Okay. High, low. Where was it? Where is it? What direction is going? Great. 13.75. The 14s. 8 cents. That's a no. Actually, that's simple. See? High, low. Where was it? Where is it? What direction it's going? It's going from 13.75 to 13. The closest one is the 14. The 14 is going for 8 cents. Not even quite there. That easy. All right, let's go to the next one. NEE, N-E-E. Ready? See how quick we can do it again. N-E-E. Ready? Here we go. NextEra Energy. High, low. Where was it? Where is it? What direction it's going? Great. 74.17. The 74 is going for 23. Oh, hell no. Pretty simple. Let's do a couple more. GLW. GLW is Corning. Those who grew up in the 60s and 70s know who Corning is. GLW. GLW. You ready? Ready? High, low. Where was it? Where is it? Hell no. Look where it is. It's the high of the year. No, I don't even have to look at the numbers. Look, it's at the high of the year. If you think you're going to buy at the high of the year, expect it to go up, hey, more power to you. Okay? I don't. I like buying it at a low as it goes back to the upside. Because what happens? There can only be one high. See? Only can be one, and there can only be one low. So let's go to a 30-day period. There we go. Here to here. Okay, great. Look at this. Here's the low. Goes up. Pulls back, goes up. Pulls back, goes up. Pulls back, goes up. Pulls back. Where do you think it's going to go next? To the upside. That's why I like the 30-day. I look the 1-year chart, give me an overall view. Okay, the 90-day chart was the last 3 months. Okay, where's the pattern? Here's the pattern right here. Up, down, up, down, up, down, up, down. I don't know. Did it take a break to come to wash my car? No, it didn't. It went up and it went down. That's all it did. Okay? Kava RBX are on the slight dip in their way on a reversal for quarterly highs. Okay, Joaquin, thank you for that. CVS is way better than Walgreens stock, though. All right, Terry, thank you for that. Let's see a couple more of these questions. Can you buy the day before the X date and get the dividend? Yes, you can, as long as you buy before the EX date. Okay. Wade, I've been doing this for 20 weeks and it's working. Wade's been here for a while. Ask him, Wade, did I call you? Ask and tell people, did I call you? Leave your number, I'll call you. How much you make this month in money from your strategy? Well, let me think. I made over 1% this week, made over 1% last week, made over 1% the week before, made over 1% the week before. I get 6 different accounts. I only share 2 of them with you guys. Okay? This strategy is 1% per week. That's over 50% per year. If that's not enough for you, you're definitely in the wrong place. Sorry. Point blank. Okay, I come from a Gen Xer. I don't have any apologies. Sticks and stones. Hey, terribly sorry. You don't like it? Hey, you know where the door is. I'm not here to make anyone happy. I'm just sharing my information. You either like it, accept it, or you don't. How are you managing trading for taxes? Ooh, Rocky, that's a good question. Personal versus LLC. Well, what you're forgetting is the trusts. You're forgetting corporations. Okay? There's a lot of different ways, and if you're asking that question, Rocky, you sound like the kind of guy who goes shopping for a Lamborghini and says, hey, what kind of gas mileage does this baby get? If you have to ask, you really need to talk to a tax strategist or a tax planner. Okay? It is your responsibility to pay the least amount of federal income tax as possible. Bixby Hub, covered calls for the W. What the hell is the W? Wayfair, yeah, it's a big fat no. Wayfair doesn't have 20 years of increased dividends. How do I know? Wayfair hasn't been around that long. Lee, CVS is going up ever since 53. CVS. Okay, interesting. 61.37. 61.37, the 62s, 56, barely making you 1%. Okay, we'll give them the benefit of the doubt. The high, low, where was it? Where is it? What direction it's going? There you go. Good. Now let's take a deeper look because I like what I'm seeing so far. Right? A year ago, 69.25. The high of the year was in January, 83.18. The low of the year was a couple of weeks ago on the 28th, 52.64. All right, the last 90 days. Okay, last 90 days. High, low, where was it? Where is it? What direction it's going? Numbers still the same, haven't changed. Okay, 90 days ago, 78.36, topped off at 80.57, back in the end of March, bottomed out at the end of May, and that was 52.77. All right, so let's look at the last 30 days, get a better idea of which direction it is going. Okay, an idea of which direction you think it's going. I can see it. Who else can see it? It's really not that difficult to see. 30 days ago, it was at 57.50. She drops down to 53. She goes all the way up to 62, pulls back a little bit, goes back up to 61. Where do you think it's going to go next? That's up to you. 3 pharmacies control 80% of U.S. prescriptions. Yeah, CVS, Walgreens, and Walmart. Okay, I like Walmart. I like I like Walgreens better. Why? Well, because it's almost at a 30-day high. 30-day high is right there. Well, where is it now? 62. It's at 61.37. How much further do you think it's going to go up? Okay, that's a personal call. My personal call is I think this baby's going to come down. I like buying down the bottom as it's going back to the upside. Okay, but you guys can do whatever you want. All right, so let's go to the next, because we're done with all the questions. 52-week high was 82. Yeah, I don't care about the 52-week high. I'm not trading in the 52-week time frame. I'm trading week by week by week. 10 PE ratio is low for CVS. Okay, fine. I thought you don't like buying at the bottom. I don't like buying at the bottom. Have you ever paper traded? You know what? I've been paper trading for 20 years. Okay, I still paper trade. Why? Because I make mistakes. I'm only human. Mosaic's looking good. Oh, wait, we'll write that on the list. Probably not going to get to it tonight. Holy cow. We haven't looked at hardly anything, and it's already 11. Home Depot. Simba, I'm going to say no to Home Depot because the premiums are always horrible. Okay, HD. I like Home Depot. I really do. 355. Look where it is. It's at the 30-day high. It's a big fat no. Sorry. Joaquin. QQQ, that's a big fat no. You know why it's a big fat no? Well, number one, it's 480 bucks. Number two, look where it is. It's way at the high also. Okay, and they don't pay dividends. Y buy looks awesome. What the hell is Y buy? YBUY. Y buy global. Okay, you're insane, dude. Okay. APA. Now, why do I say you're insane? Number one, no options. Number two, 19 cents. There's no way in God's green earth has this company been increasing their dividends for 20 consecutive years. Not at 19 cents a share. Sorry, I had another call. Didn't hear your answer. How much cash do you make in 1 month? That's none of your damn business. How's that? All right. All righty. Where am I? Let's check it out. We haven't even looked at MU yet. Do you like Main Street Capital? No. Insane, I take it. Okay. Low key me and homie weren't talking about dividends. We just day traders. Well, there you go. Papa Breeze, how you doing? All right, so let's take a look at MU. It's like the first stock we haven't done. CAG. We'll take a gander at it. MU, which is Micron Technology. That's a no. That was quick, wasn't it? Why is it a no? Look where it is. There's the high right there. A couple of drops. It's going to keep coming down until we, the buyers and sellers, have taken enough of the profits. Profit taking. If a stock goes up, okay, it's at a high. The high was 2 days ago. Well, of course there's going to be profit taken if at the high of the year. What do you think? You think it's going to keep going up? No, at some point in time. Let's go back here a little bit. Okay? Think of this. Okay? Realistically, and don't kid yourself. Seriously, don't kid yourself. A year ago, she's at 60 bucks. Okay? 2 days ago, she's at 160 bucks. Do you honestly think people aren't going to say, oh, hell, I'm taking my profits now. Thank you very much. Joe Disney, I'm Gen X. All right, Marco. What is that? Disney, we'll take a look at because it is on the list. MBIO, Raul. Sorry, I'm not even going to waste my time with that one. Dow, we'll take a look at that one. Do you ever just buy the dividend collection and then move on to another stock? No, it doesn't. Paid me $250 this week. Well, good for you. AVGO, that was a no. They don't have enough dividends for me. Sorry. Mustang Bio Baby. I have no idea what that means. Okay? Now, Joaquin, I get a question for you. Or is it Joaquin? I have no idea. Trevino. Okay? Old school, new school. Which ones? 68 Mustang, 08 Mustang, 24 Mustang. What do you like? All right, so MU is a fat no, because if you seriously think, okay, at 160 it's going to continue going up. A year ago she's at 60 bucks. Now at 160, there's huge profit taking. It's going to keep going up. All right. Uh-oh, fan just turned off. Well, that's okay. We only got a few more minutes left to go. All right. But I love the 2009 Mustangs. Yeah, not the same. There's a huge difference between, I've driven in, I think it was an 08, 09 Mustang Cobra. Oh, that was nice. But still, not quite the same as a 68 Mustang. AA, Alcoa, has been on fire the last 3 days. Thoughts on the $40 strike? Interesting. Alcoa. Interesting. Okay, so let's take a look at Alcoa. First thing I want to see, 40.39. The 40's going for 113. That's over 1%. The 40.50's 87 cents a share. That's over 1%. Okay. Here's the high. Here's the low. Here's where it was. Here's where it is. This is the direction it's going. It makes me want to take a deeper look. Okay, so let's take a look at it. Do you use any phone apps for trading? I use Robinhood. but it's a different trading style. Okay, not this. This I do on Thinkorswim only. Yes, I know Parkis Alcoa dividends aren't there, but he wants to take a look at it. So my opinion is, hey, if you like the numbers, hey, look where she is. All right. Okay. Here's your bottom down here. There's your top. She comes down 3 days to the upside. Yeah, more than likely it's going to continue going to the upside. Possibility. But you have to ask yourself. Even though it doesn't have 20 years of dividends, we took a look at it. It is what it is. All right. Next one on the list, Dell. Dell. D-E. Now, we all know who Dell is. Okay. Yeah, I don't like Dell either. Okay, look at January. January is at 50 something bucks. What is that? 70 bucks. And it jumps up to 180. I want to show you this for a second. Okay, for those of you who think that, what is that setting on Thinkorswim? Thinkorswim is really complicated. Okay, I eliminate almost everything off of my screen, and I only use like 3 or 4 different things on Thinkorswim, and that's all I use. Let's quickly take a look at Dell for a second. Okay, now when I say it ain't a profit until you take it, look, here's the high of the year. That's the high of the year. Okay, one in the downside, and then the market maker took it all away. Do you see that? Here's your high right here, 180. 2 days later, we're down here at 130. $50. The market maker just took it away. So if you're buying a stock and you're riding it up and you don't take your profit, it's your own damn fault. Okay, I don't look for stock appreciation. I don't. Okay, I get in, I get my percentage, I get my 1%. Thank you very much. Dell is getting benefits from AI. Well, good. Wonderful. Okay, here's your 30-day high. Here's your 30-day bottom. It's going to the upside. Here's a high right here. Now it's coming back down. I wouldn't get in on it, but that's me. Okay, you don't do what I do. You make up your own decisions. Do you think Dell's a good deal? Do you want to buy Dell at 145? Ooh, here's something good right here. Now, some of you may have seen this. Some of you may not have seen this. Okay, Alan, check this out. You ready? Alan, check this out. The last trade, 145.06. The bid, 145.20. The ask, 145.26. First thing Monday morning, the market maker is going to push it up. Okay? The last trade, 145.06. That was the last trade this afternoon. 145.20, 145.26, both higher than the last. Meaning that baby's going to go to the upside first thing Monday morning. Is it guaranteed? No. But usually it happens that way. Okay, next on the list, ARM. What the heck is ARM? Arm Holdings something, whatever. That's another no. Okay? Okay, here's your high. 2 days to the downside. Yep. That baby's going to have profit taken. No, thank you. Pfizer. Marco. Pfizer. PFE. We'll take a look at it. Probably not today because we're 11:15. Yeah. Camera shut off because the fan. Remember I told you the fan died a couple minutes ago? Yeah. Without the fan blowing onto the cameras, they turn off because they get hot. Okay, next on the list, GLW, which is Corning. GLW. That's a no. Okay. High of the year. I have no interest whatsoever of being a Me Too. Do you know what a Me Too is? Ooh, Corning's great. It's at the high. It's never been this high before. Yeah, good, fine, dandy. I'll wave for you from the shore. Do you care about EMA or SMA? Nope, not at all, Rich. Not at all. ORC. What the heck is ORC? Yep, that's a no. Okay. It's a monthly, number one, $8. Look where she is. She's stuck in the channel. Not going anywhere. Yeah, ORC is a no. Sorry about that. Bongo Billy. Bongo Billy. All right, next on the list. Altria. I like Altria. DJT. Well, Dwayne. All righty. Bongo Billy, 12 cents per share. Well, good luck with that one. I don't do companies unless they have 20 years of increased dividends. All right, can somebody take care of Mr. Dwayne Mann? Because apparently he's not paying attention, not listening. Where are we? Altria, M-O, Dividend King. They've been in business for over 100 years, and they've increased their dividends consecutively every single year. Now, Marco, no to Coca-Cola. The premiums are absolutely horrible. Thanks, Wade. Okay, Altria. All right, I'm going to say no to Altria, and let me show you why. Okay. Last 30 days. Here we go. Check it out, Altria. Now, we talked about this the other day. I don't know who remembers it, but someone might have remembered it. You ready? 30 days ago, 46. 5 days to the downside, 6 days to the upside. She comes down, she gaps down. 1, 2, 3, 4. She fills in the gap. Okay, 4 days to the upside. That baby's going to come back down again. Or, if you like, Altria at 45.80, she could go up. The 45.80, the 46 is going for 25 cents. Yeah, it's a no. The numbers just ain't there. PLTR, okay, Trucker JB, sorry, PLTR has no dividends. It is a no. Sorry, that's a no. All right, next on the list, ADN. That's a no. DIS, isn't that General Mills? I like General Mills. MJ, how? MJ, what are you saying how to? ABRZ. ALB found the bottom. I don't know. Did they? Glenn Driver. Costco? Yeah, hell no. I don't do anything over 250 bucks. Sorry. ALB. We'll take a look at that one probably tomorrow. ABRZ. Trucker JB. I have no idea who that is. ABRZ. Now, I've been doing this for over 20 years. When I say I have no idea who they are, it's usually going to be a no. Okay. ABRZ. Yeah. No. Ford. I like Ford. I actually own some Ford. What the heck is ABR? ABR. Arbor Realty Trust. 1412. Okay. 1415s. Yeah, that's going to be a... Okay, well. ABR. We're at YouTube Finance to find out the numbers for ABR. Okay, interesting. You got a dividend of $1.72, 12.18%. Okay, great. Let's see how much dividends they pay and how often they have increased their dividend. $2004. Okay, so 2004 to 2024, that's 20 years of increased 20 years of dividends. Well, let's see how often they increase. 35, 43, 47, 55, 57, 65, 70, 72, 57. Wait a minute, it's going backwards. Why do I want a company that's going backwards? 57, 58, 60, 62, 62, 62, 24. Really going backwards. 8, 10, 11. So it goes from 62 cents a share down to 10 cents a share. Yeah, no thanks. 13, 15, 16, 18, 21, 25, 3? 2018, 3 cents a share? 27, 28, 30, 32, 34, 38, 40, 42, 43. Okay, yeah, no. There's no consistency whatsoever in the increasing. All right, ADC. I never heard of them either. ABC. Oh, another lovely one. All right. 2004. Okay, 49, 49, 49, 49, 49, 49, 40. There's no increasing there whatsoever. Okay, so from 2004 to 2007, it stayed consistency at 49. 2007, 50, 50, 51, 51 to 40, drop in 20%. Yeah, no, don't like that. 40 to 41, 43, 45, 47, 48, 50, 51, 56, 57, 59, 62, 21, a 60% decrease in dividends. What were you thinking when you bought this, Justin? Seriously, what were you thinking? A company that from 62 to 60 to 21, from 62 to 21, that's a 60% decrease in dividends. Why would you put your money there? Me, I'm a little bit more fickle. Okay, I don't do companies that don't increase consistently every single year. You get the Dividend Kings, 50 years of increased dividends every single year, higher and higher and higher. 5 decades of increased dividends. Okay, Dividend Aristocrats, 25 years. Dividend Champions, 25 years. What would be a good example? A good example? A good example, you say? A good example, PPG, Emerson Electric, 3M, Johnson & Johnson, Pepsi, Target, Kimberly-Clark, Coca-Cola, Altria, AbbVie, Abbott Labs, Hormel, Clorox, Procter & Gamble, Lowe's, Home Depot. What other good examples do we have? American Express, Bristol Myers Squibb, MasterCard, Verizon, AbbVie, Bank Mellon, Wells Fargo, Ally Bank, Aon. There's over 300 decent companies that have consistently increased their dividends every single year, year after year after year. Why would you put your hard-earned money into a company that doesn't increase their dividends? What is a dividend? A dividend is a portion of the profits that goes back to the investors. So if they're profitable and continuously profitable, of course they're going to increase their dividends. If they're not continuously profitable, why would you put your money there? I mean, it's logical if you think about it. Tyson, you got to give me the ticker symbol, Lee. Okay, let's go back to where we were. Next on the list, ABT. Isn't that Abbott Labs? ABT. Abbott Labs. All right, interesting. 105. 105.70. The 106 is 92, not quite 1%. But check it out, 92 to 114. So you probably could get your 1% if you did a limit order. All right. TSN. 57.59. 57.59. That'd be the 58. Yeah, that's a hell no. Sorry. See, the numbers are right there. 57.59. The 57s are going for 20 cents. The 58s are going for 0. It ain't worth it. But the stock will drop in the dividend amount on the EX date. Yeah, so that's why I buy before the EX date and I sell before the EX date. I don't want the dividend. I want the premium. But I want the premium to be 1% or more. Let's take a look at Macy's. Macy's is a perfect example. Okay, 1846. Well, the 1850s are going for 29 cents. 29 cents is more than 1%. So the question is, do I like Macy's? And do I like Macy's at 1846? Macy's has been in business for over 100 years. Why wouldn't you? Are you live on YouTube right now? Yes, I am live on YouTube right now. Okay, well, one of the YouTube cameras died because it got overheated. All right, we're at 11:30 anyway. We got same name. Nope. Okay, the 10-minute trader. The THE 10-minute trader. The 10-minute trader. Can you go through the Macy's example again? Oh, Jimmy, sure I can. Okay. Macy's right now, the bid $18.30, the ask $18.46. I can buy it for $18.46, sell the $18.50s for 29 cents a share. 29 cents a share on an $18 stock. 0.29 divided by 18.46 comes to a grand total of 1.57 for the week. 1.57. Okay, so what has to happen? The stock's got to stay where it is. It's at 18.30. Okay, so if she goes up over 18.50, I make my money. If she doesn't, I still own the stock, but I still collect that 1 point, whatever it was. Okay, so what do I want to see? Here's the high, here's the low, here's where it was, this is where it is now, what direction it's going. It's going to the upside. Let's squeeze in a little bit tighter. Okay, the high of the year right there. Here's the high of the year, 22.20, way up there. That was back in the end of March. From there, she drops down, goes back up, drops down, goes back up, drops down, up, down, up, down, up, down, right here where she is now. Okay, which direction is she going to go now? Well, I get you a third grader. Look, up, down, up, down, up, down, up, down, up, down. Where's it going next? Up. Normally. Have a good weekend, Jim. Yep, we're about ready to close up. It is 11:25. Let's give it a wrap. I'm getting a little bit tired. I want to start my weekend. Hope you guys have an interesting time. Hope you learned something. Amanda, over on Instagram, hope you learned something. Okay? Come back again. We're here every night, 9 p.m. Okay? You guys have a great night, and I'll see you again. Which stock was that? That was Macy's. Where are you getting the 29 cents? Are you trading options? Yeah. Weren't you paying attention? Trucker, you learned something new? Cool beans. So come back again tomorrow. Okay, Jimmy. Okay, pay attention, Jimmy. You ready? These numbers up here are for the stocks only. Okay, the last trade, 18.30. The bid, 18.30. The ask, 18.46. The volume, 6 million shares. The open, the high, the low of the day. Open, high, low of the day. Okay, underneath the stock information is the option chain. Now, I do weekly options. 21 June 24, that expired this afternoon. Okay, 28 June 24, that is next Friday. If I buy it at 18.46, I sell the 18.50 because that's the closest strike price to the purchase price. The purchase price, 18.46, strike price 18.50. I can sell it for 29 cents. It's right there. This chart right, this screen is live on YouTube. You can't see the numbers on your iPhone, your tablet, or whatever you got. That's why it is live on YouTube. Go sit in front of your big screen TV or on your computer. You'll be able to see those numbers. But the 29 cents is right there. Okay, so you guys have a great day, and I will talk to you again tomorrow night. Okay, bye to you guys over on Instagram. Bye, all y'all. Bye over here on Facebook. Bye, all y'all. Okay, and TikTok. You guys have a great day. And all those questions, I learned something great. Well, a couple more questions. Hold on before I cut you off. James, question. If the stock calls expire on Friday, do you put the stocks you bought back to okay, I'm not quite sure what the end of that conversation was. Okay, the stock calls expire on Friday. Okay, so let's go a couple hypotheticals, okay? If I buy it at 18.46 and I sell the 18.50s, if it is 18.50 or above on Friday, I'll be back on cash the following Monday. I mean, I have all my money back and I get to keep the premium. Okay, if it is below the 18.50, I get to keep the premium and I'm back with the stocks back on Monday. Okay? Calls. Good info. Thanks, Dennis. Bye, Mo. Michael. The option costs 29 cents. Yes, it does. Really helpful. All right, Justin, way to go. Awesome. Thank you. Oh, option. Yep. Good night. Good night. Call on Monday. Yep. Good night. Good night. Oh, thank you. All right. So, again, if any of you guys want to call and talk to me, send me a number. I will give you a buzz. Other than that, you guys have a great day and see you again tomorrow night. All right. Sanchez, give me a buzz in the morning. Okay. Have a drink. I'm going to go. I'm going to have one or two. Guys, have a great night. And now, there we go. Now, for those you still here on YouTube, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow for a safe, predictable, consistent 1% per week. I'm here every night, Monday through Monday. That's, every single night. Yeah, okay. 9 p.m. until 11:30 p.m. Eastern Standard Time. You guys have a great night, and I'll talk to you again